he got a loan and he shouldn't have got the loan. And when I say that is he got a loan and he's like, oh, I'm paying, he got an $80,000 loan, but it's like 110 he has to pay back over a year and a half span. If you look at the note that he got, it said like 11% on it. When I ran the numbers, that interest on that loan was about a 34% interest rate. And he made that error, and that's going to cost him $30,000 that he didn't have to do if he would have gone, and gotten a SBA loan or something else to help him grow his business.
All right, you're an entrepreneur and you don't even think about your taxes, do you? You just have your head in the sand. Taxes are an afterthought. Well, guess what? It's not even the end of the year. So we have a perfect guest for you because you can still make a difference this year and save big money on your taxes. And before I introduce my next guest, I want to introduce my co-host, Chris Gray. Chris, what's going on?
Dimitri, what up?
I am living the dream and excited to introduce the CPA that's going to help us get our ostrich heads out of the sand. Nick Foster, how's it going? Tell us about you.
Hello, Dimitri and Chris. Things are going good on my side. I am a CPA that have been doing this for over 20 years. Started my practice 10 years ago. We focused on small businesses, helping them save taxes and be more ahead of the game than just looking at backwards and having tax problems along the way.
This is going to be a pretty big question because I'm sure you can go all types of places with this. So feel free to take it. But what is probably, when it comes to an entrepreneur who's netting over six figures in their business, what is the single biggest mistake you've seen in 20 years of working with these individuals?
I would say, one is more, if you're a six-figure business owner, is kind of using the S-Corp tax strategy. And so I've also seen some people making over $400,000, $500,000 as like an attorney, professional services, but they never set up an LLC. They never set up their own entity and are running everything through their personal bank account. So problem number one is always separating business and personal. Right. So that's problem number one. Number two is when you're an LLC, you're susceptible to self-employment tax. So what that means is that if anyone's a W-2 out there listening, the employee has to pay 7.65% when they get a W-2 and the employer has to pay 7.65. So what that means when you're an entrepreneur and starting out, you essentially have 15.3%, which is self-employment tax on top of your income tax. So we have a lot of clients that we've seen, they never set up their S-Corp. And essentially, if they're making $100,000 a year, they're paying self-employment tax at 15% plus another 20% income tax, depending on the state, which is equivalent to 35% tax on $100,000. Which the highest tax bracket is 37. So they should not be paying that kind of tax.
Dang it. Well, it's tough out there for the entrepreneurs, right? And so, but at what level does it really make sense for them to start caring about their taxes? I mean, if they're making 10K, probably not even owe any taxes in the first. So at what level at income does it actually start to matter?
The next thing that people don't understand is, are we talking income or profitability? Because those are two different questions in the same regard, right? Because I would say if you're profitable, which means all the money you bring in, all the expenses that come out, and you're netting about a $50,000 net income, then that's when you start wanting to get more strategic, right? And there's a lot of business owners that don't know what write-offs they can do. So when we're doing the bookkeeping and everything, my team is advising them, hey, have you thought about this as a write-off? Have you thought about this? We actually just got a new client 3 weeks ago that wants to be an S-Corp, and he made $140,000. He has no write-offs. And so our team right now is constantly talking to him, trying to figure out other ways for him to understand that a lot of people don't understand. There's a lot of advantages being a business owner, right? And so if you look at it from a business owner standpoint, if you can have an expense that would be usually personal. So a W-2, let's take for instance, if someone has $100 cell phone bill, they're paying after tax on that cell phone, right? So they're already paying the tax before they even pay for the cell phone. If you're an entrepreneur and you're using your cell phone in the business, now it's pre-tax dollars. So essentially, if you're in the 25% tax bracket, you're essentially paying $75, not $100.
Well, then I think one of the key words that stood out to me in what you just said and what you just described is strategy. So then my question to you is, what's the difference between filing taxes and tax planning?
Filing taxes is filing taxes, whether it be your 1040 or if you're an S-Corp, like we were talking about with the tax strategy, that's a separate tax return. And the way to understand if you have a business tax return as an S-Corp strategy, it's called a flow-through entity. So a flow-through entity means whatever income was produced from that business then flows through to your personal via a K1 is what it's called. But from a, tax strategy is coming fourth quarter for most of our clients, we're getting into their numbers. So it's literally looking at, okay, based on where we're at through October, we're going to forecast what the rest of the year is going to look like. And now we know baseline, here is your taxes. Here's what you're looking at from a tax liability standpoint, right? And so there's a lot of clients that CPAs don't do them a service and don't have any tax planning meetings. And so come April, when they're filing their taxes, or March 15th is business taxes, they're surprised to find they have a $40,000 tax bill. I have a client, doing this S-Corp strategy and figuring out different things. They had never had their CPA prior tell them about this. And so we ended up saving them 25 grand. And she thought we were doing fraud. She was blown away. But then you look at, taxes is one of the biggest expenses of people's lives. And if you're not critical and strategic in that client right there just spent an extra 100 grand that they could have given to their kids or done whatever with that if they had the right planning in place prior.
Yeah, and you got me on that when you started talking about numbers, and I love numbers. We're talking about if you're spending $1 and you're in the 25% tax bracket, you actually have to earn the $1.25 and see what you can figure out, what you can transfer into your as a business expense instead of a personal expense. I mean, that's a huge, huge tax on all the stuff that you're expensing personally. So, okay, well, what about if somebody is running their business, they got their S-Corp set up, and they're expensing the right things, but they still have a big tax bill at the end of the year. They know they have, and maybe they're even paying quarterly. But anyway, over the course of the year, it's a big tax bill. They still have this fourth quarter coming up. So what could they do potentially to offset that?
So if you're an S-Corp, part of being an S-Corp is you have to pay yourself a nominal wage in your business, right? One of the big low-hanging fruits that's out there is maxing out your 401k. And so there's two different ways within that. One is if you are a solopreneur, so you have no one else, you have no other employees, it's just you. That's a huge benefit because you can actually set up a SEF IRA or a solo 401k. And the solo 401k is great because let's say the entrepreneur is making $200,000 a year and they pay themselves 100 grand. The business itself can contribute 25% of what they pay the employee to a 401k. So by doing that, that's a business expense. So $25,000 goes against the business, and that 25 grand now goes into their 401k for their retirement. And if they even wanted to get even more smart, they could do 100 grand payroll, and we're going straight numbers that I know accounting is so exciting. But they could do 100 grand payroll. They could max out their 401k contribution as the employee. So they could put 23 grand into the 401k plus the 25 grand And so $48,000 now is in their 401k. That would have been income, so that's saving them $10,000 in tax, and it's moving from one pot to another that they're still controlling.
Nick, for those who don't know, we know Nick from a separate mastermind and spent a lot of time with him, and he is super knowledgeable in what he does, which is why he's on here. And so me and Dimitri have the opportunity to know, hey, if we have questions, we can go to guys like Nick. We know what a good CPA looks like. But for the audience, when they're like, oh man, this is great stuff, what are they looking for when they're trying to identify a good CPA?
The difference is, are they proactive or reactive? I always tell my team, it's always better to be offensive than defensive. So, what I found in the CPA world, which is a dying industry, which blows my mind, is there's a lot of CPAs, especially with the tax changes going out there. The big, beautiful bill just got passed. So something just happened. Like ever since COVID, things have just kept changing. And, if we even rewind back, 2017 was the biggest tax reform in 30 years in 2017 with the Trump tax cuts. So to look for a good CPA, there's a lot of aging CPAs and there's some really great ones and know a lot of strategies. But even in these CPA conferences, there's a lot of CPAs that are like done doing all of the work that has to go into being a good CPA. And so do they care about their clients, or are they just a transaction? Like I would say that would be a big piece.
We have a lot of businesses or owners of businesses in different industries. For instance, e-commerce. We have small local businesses in the trades. We have lead gen companies, internet businesses, whatever. And they're all probably wondering, does everything about the same no matter what business I'm in, or how do the different industries differ?
From a tax strategy standpoint, they're very similar, right? There's a lot of numbers are numbers, but what is different is what can they write off, right? As a business owner, you can write off your vehicle. That can become an asset of the company. And on year one, because of the big, beautiful bill that just passed, bonus depreciation's in play. So if you buy a $50,000 vehicle, you can make that $50,000 bonus depreciation expense in year one, And so, other things we do is home office deduction. So the home office deduction is a portion of your house. If you're working at home, you can allocate all those expenses as the percentage of that house as a home office deduction. Now, what that allows for some clients, depending on what they're doing, but by making the home office deduction, now you've made effectively your office is where you start work. And so anywhere else you go, now you're using your car more because you're going to clients, and the start point is right at zero. Does that make sense from a mileage standpoint or whatever? Because it has to be a business, in order for it to be a business asset, it has to be, okay, if this is a vehicle, what are you doing with the vehicle? And so the IRS code is, okay, you have to track your mileage. But if you're tracking your mileage where I go into the office, now I'm going to go to this client, you should only be writing off from the office to the client. But if you have the home office, now you've created a whole nother mileage system to give you more percentage of business than personal.
You were talking about purchasing vehicles, and the big, beautiful bill helps with all that. And you got to excuse my ignorance here, but what I see, Nick, come the end of the year in December, I'll hear, people in our space like, hey man, join this $30,000 mastermind. Do it now because you could write it off, or go buy a freaking G-Wagon or something. Do it right now so you could write it off. Is that a good or bad thing? And if so, why?
The hardest thing is going against all the TikTok stuff that's out there, or the Instagram. Oh, you should do this. You should do this. And a lot of it is an inch deep in what it really should be doing. Right. We come across clients all the time talking about the G-Wagon purchase. We've had clients that are like, hey, someone told me I should buy a vehicle every year because I get to write it off. But there's a lot more nuances within that. Right. So going back to the $50,000 vehicle, you take the depreciation year one. Now, from a business standpoint, your vehicle's worth zero. So if you go into year 2 and I'm going to go buy another $50,000 vehicle, but your trade-in is $40,000. Well, that $40,000 now becomes income to the business, and you're only really getting a true benefit of 10 grand, right? So there's business strategy from a tax perspective, and there's just business strategy in general, right? I mean, if you're making $100,000, and I've coined the phrase Foster frugal, right? If you're making $100,000 and you're going to go to a mastermind for $30,000, well, to me, unless you're seeing the true benefit, I think that's dumb. That's 30% of your income you're giving to someone else for the hard earned money you've made, unless it's what is the 30,000 going to give you? Right. So, I always say, don't let the tax tail wag the dog. You got to make the decisions that make sense for your business and personally, not just how it affects your taxes.
So going on that topic of tax tail wagging the dog, I like that a lot, actually. But what can entrepreneurs expect, assuming they're making 100,000 or more out of their business? What percentage of that roughly can a real strategic planning get them in savings?
I have clients that have been with me for 9 years, right? We've gotten them dialed in so much that there's not a lot we can do, right? But if a new client comes in and they had no tax planning meetings, if they want to use all the strategies, I would say you're going to save 30 or 40%, right, of taxes. And there's some stuff like W-2 earners. There's not as many levers that you can pull, but any business or personal can use the HSA deduction. And HSA is health savings account, which is a huge benefit. If you're a family, you can contribute $8,300 a year into your HSA. So that is full tax deductible pre-tax before you start going into taxes. And that's your money that you get to use for medical expenses down the way, or as it continues to grow year over year, it actually becomes a tax-free investment vehicle that people can use.
Nick, again, back to my ignorance, help me understand this. I'm looking at this thing and I'm like, hey, I'm looking at my finances and I want to save money. And I'll go research stuff and I'll see a CPA and then I'll see a tax strategist. And then my thing is like, well, shouldn't my CPA be a tax strategist? And so what's the difference? And is it realistic that I can find 2 in 1?
It's just like any profession, right? Just because someone has a CPA designated to their name doesn't mean they're good at what they do. Like you get that from a doctor, you get that. I've had neck issues. I've gone to see numerous different professionals. Some are better than others. Tax strategist, it depends on what the tax strategist is doing. Right. And some people become very specialized with what they do. Right. So if you're looking to sell a business, there's tax strategies to sell a business. Right. And that may be their thing, or there's certain tax credits that you can do, and that's their thing. So it depends on what your need is and what you're looking for. So there are good CPAs out there that do tax strategy, right? Or having the knowledge of real estate, and there's all tax strategies within that. That's kind of a vague question, so I'm trying to narrow it down to answer you, Chris. But there's good ones and bad ones.
And it seems like you got to, as somebody who's looking for a tax strategist, probably interview a few people that seem pretty good and tell them your situation, see what they say, and figure out what's a right fit that way, right?
Yeah, and ask them, how is their approach, right? Do they have tax planning meetings come the fourth quarter, and what does that look like? And how are they billing you? That would be another thing. Like me dealing with high net worth people and dealing with bigger developments or bigger construction companies, they have audits that are done. And what I don't like in the industry that I am currently in is the bills come in. It's like, what did I just get for this? Right. And so it's are they strategic with you? Are they partnering with you, or are you just a number? And what does their billing structure look like? Most of the things we do is fixed fee. So the clients can budget it out, what that cost looks like, and kind of knowing what they're getting when they're getting into it.
I recognized something when I first got into the game where I did not have a good CPA. And it impacted me personally and professionally, obviously. So,
and why do you say that?
I mean, just they were not proactive, like you were saying, and they just flat out didn't do shit. Like, didn't file my taxes one year. It was super late and didn't even give me an extension. I mean, they were horrific, Nick. And then I got a good one, and I saw the difference. Again, she is offensive, on the offense. And so I think I could answer this, but I want to hear it from you. How does partnering up with the right CPA impact the growth of your business long term?
Like, we're doing the accounting, right? If you look at why businesses fail, number 3 on that list is not knowing your numbers, right? So, we've had clients before we did their accounting, they were literally like, well, I just looked at my bank account and I know I'm doing well, right? But that's such a misnomer because looking at your bank account, what happens, I have $30,000 in the bank, but you may have $20,000 outstanding checks that haven't cleared the bank. So you really only have 10 grand and they're overdrafting their account, right? And so knowing your numbers, like I said, I mean, the numbers tell you how the business is running. And so when I'm doing, for small businesses, I do CFO consulting for larger clients, but I do quarterly meetings with small businesses. And we're kind of analyzing their numbers and making them eat their vegetables. Like, why are you spending this? What are you doing here? Hey, revenue's starting to trend down. What are you doing? I just had a client last week that he's been a client for over a year, but last year he got a loan and he shouldn't have got the loan. And when I say that is he got a loan and he's like, oh, I'm paying, he got an $80,000 loan, but it's like 110 he has to pay back over a year and a half span. And so if you look at the note that he got, it said like 11% on it. But when I ran the numbers, excuse me, when I ran the numbers, that interest on that loan was about a 34% interest rate. So there's a lot of, the QuickBooks loans, these hard money loans, people don't realize. So we can't even get him out of that loan the way it's written. So I can't even help him refinance it. And he made that error. And that's going to cost him $30,000 that he didn't have to do if he would have gone, and gotten a FBA loan or something else to help him grow his business. But if you don't know numbers and you don't understand it, you're just like, I need cash. Some people make very bad decisions. So having someone in your court to kind of help you question what you're doing, like I said, and challenge, right? In a kind way, we challenge a lot of our clients' business decisions because they're not looking at it the way we're looking at it.
So that was kind of a preview of what might look like if somebody were to hire fractional CFO. At what point does a company need that, or think they should consider interviewing for a fractional CFO, kind of like you?
I mean, so there's 2 parts, and I keep going 2 parts, so I apologize. So if you're a small business and you're making a few $100,000 a year, it would probably make sense to have someone almost being like the financial seat in a board of directors, right? So it's looking at the numbers, not emotionally, but just what they say. And so helping them think more strategic, kind of going into, if you're making a few $100,000 a year, you should probably have a budget in place. You should probably be going, okay, here's how let's look at the front of the boat, not just the back of the boat, because the numbers that you get when you get your financial statement, those are stale numbers and they're a month in the rears of what's actually going on currently, right? So if we're creating a budget for clients and then going front of the boat and saying, okay, my goal is for you to make the $200,000 we went into the budget with. Now we went into a budget that you were going to spend $20,000 in development, right? Or professional growth. And now Chris Gray says, oh, you have $30,000 mastermind. You should spend that, right? So now going back to us, we're now going, okay, where are we going to reduce costs in the budget to keep you accountable for that $200,000 profit? Or are we going to grow the revenue and we're changing the game plan as we go?
Nick, for me, I like coming to a CPA and partnering up and working with one for the reasons you just stated. I can think of a couple of people I know who probably should have one, but they're like, "Oh, I could do it myself. I got a feel for it. I'll create an AI, a GPT CFO that will take care of everything for me." Where would be the pitfalls with somebody who's wanting to do it themselves or use AI to manage their finances?
Ooh, okay. So two parts of that. One, I always tell clients, okay, if you're going to get your eye taken out, you think you can do it, right? I mean, there's schooling, there's a lot of things that go along with this, right? And we embrace technology. So I'm looking at AI to kind of help how I can make better dashboards or better things for the clients from a readable standpoint. But if you look at what AI is still doing and it's just not there yet, it's not helping. It gives you some KPIs, which is good, but it's not giving the story. It's not creating okay, these are the things that are going on where, it's critical thinking, right? It's analyzing the data. They don't know what Chris Gray is. Oh, you paid Chris Gray. It's not analyzing to that nuance of the financials to actually be like, well, that was a bad decision. It doesn't do any of that. It doesn't look, it just takes the numbers and spits out stuff. But even using that, trying to figure it out for my clients to help them a lot of the times, and I don't know if you guys use a lot of AI, a lot of the times it spits out the wrong data, right? It gives the wrong numbers. And I've had to be like, you didn't do this correct. And be like, oh, you're right. And so so if someone's not good with numbers and they're trying to use AI to do this, but they don't know what is right or what is wrong, that may put them down a whole wrong path if they don't know what other answers or questions to give it to keep refining the data.
I'm going to say from personal experience that proper tax planning is pretty much the easiest when you're working with a professional and quickest way to get ROI on your business. And so it's just like, how do you not do it at this point? Especially you, Nick, you mentioned COVID kind of sped things up. And I think a lot more people are aware of taxes as a thing and tax planning but still some people still not taking the leap and hiring a professional and actually getting that 30 or 40% in savings. I mean, like, come on, guys. But okay, Nick, I want to come back to something we were talking about earlier, and you mentioned the big beautiful bill, and I think in many people's minds, like, oh, well, that's a tax cut for the rich or something like that, and it might not apply to me, even if they are quote unquote rich. But what's like the main thing out of that bill that came out for small business owners that they can still do here in 2025?
What the big beautiful bill did was going back what I was saying about 2017, the Trump tax cuts. That was a temporary tax cut. And so if that didn't get passed in 2026, all of that was going to expire. And so that's kind of what it made it permanent for QBI deduction. And so what QBI deduction is, I'm trying to think how to simplify it, is if you make $100,000 a year and you're paying payroll and everything else, when it flows through from your business return to your personal, you're only going to pay income tax on 80,000, you get a 20% reduction. So that was a big, and to tell you from an emotional standpoint, I was really scared for the Trump tax to expire because we're the messenger of what the tax laws and rules are. But if a client's taxes are going up by $5,000 to $8,000 and I'm the one bearing that bad news, they probably would have blamed us. Do you know what I'm saying? Like, oh, well, it wasn't like this before. So I mean, selfishly, I'm so glad it passed because I don't have those conversations.
Yeah, that reminds me actually of somebody I heard, actually multiple people I've heard say this over the last whatever years it's been, 4 or 5 or 8 or something, but they're like, some tax cut came into play and they're like, man, I hate this XYZ politician because my taxes went up. And I'm like, wait a minute. Or because, it was this, is because I didn't get as big of a refund. That's what it was. I didn't get as big of a refund. I'm like, well, what about how much did you pay the same amount of taxes or more or less? Like, I paid less taxes overall, but my refund was smaller. Like, that's not, you guys got it backwards completely. So I could totally relate, Nick, with some of the clients you must have where it's just like, you could try explaining it whatever way, but they're still not going to get it. It's still your fault.
Yeah, we get that a lot. But that goes to the relationship, right? So it goes to, the clients that we get that from. Those are the people that are just like, hey, can Foster Financial do their tax return? But that's just like, go to H&R Block if you just want the tax return, right? We can do it, but that's the drop in the bucket. Are you looking for more of an advisory role where we have a team that's able to help them month over month at a fixed fee, and they're like, hey, I got this dumb buddy Chris Gray that told me to buy a $30,000 mastermind, then what do you think about that? Right now, we have account managers that you get to call and ask those great questions to help you navigate these things and not just be like, yeah, I have 30,000 in my account, I should go buy that.
Hey, Nick, you gave us a cautionary tale earlier about somebody who they got the loan through QuickBooks and they paid $30K more than they should have. You've been doing this for 20 something years. Can you think of another tale? Maybe one of the worst situations you've come across where somebody royally screwed themselves because they didn't have the right CPA.
I'm going to put on my CFO hat because I think I've seen way more problems on that side, like with construction clients that as they continue to grow, like construction clients that are from 5 million to 30 million, they don't need a full-time CFO, but they need a financial seat because construction accounting is so, and this is not taxes, this is more just financial means, but construction clients are, unless they're doing percentage of completion from an income standpoint, things change so much, and I'm going into the weeds of accounting, so I don't want to geek out with it. But like, if someone's not, if you're a construction client and you have a contract of $1 million and you bill the $1 million, I'm trying to go and simplify it. You bill the $1 million in the first 3 months, and you look at your financials are looking great. But if that's a 6-month project, and like I actually had a newer CFO client, they were billing in accounting, they were billing the whole contract day one. So it made the financials look so much greater. But then as the thing went, they are not tracking their profitability by project and everything else. One of my longest standing CFO clients, we've done so many different things, whether, they're at a job site and we have a geofence around the job to track time. We actually, when we put that in play, having 100 employees that are out on these different projects, we saved them essentially $10,000 a month in payroll because it was fraudulent time cards. People were charging to jobs that they shouldn't have, or they weren't even there, and the superintendent was approving the time cards. So, from a number standpoint, that's a big thing. But, from a tax side, it's just not having the plans in place to go forward.
All right. If you're an entrepreneur of the business, small business, you're already making money, and especially if you have had your head in the sand and you haven't thought about your taxes and who knows what's going on with them, are you even filing them? Hopefully you are, but I'm assuming many of you have not begun your strategic planning the year that the taxes actually apply, which is right now, 2025. you got to contact Nick, and you can do that at fosterfinancialcpa.com. We're going to have that link in the description. And also, if you're in construction and you're looking for that seat at the table who's going to give you the numbers straight and get you these savings and discounts and also strategic planning. And it seems like it's even more important in those cases. Definitely contact Nick. But Nick, I want to, and you can add to that if there's anywhere else we can contact you. But I want to get you out on this question is, let's go back in time. A 7-year-old Nick running around the backyard with a baseball bat and saying, "Dad, I want to be a CPA." Kind of give us the
I'm second generation CPA. So
there you go.
Going.
Yeah, give us the backstory a little bit.
So I'm second generation CPA. My background, I actually went into corporate America and worked for development companies, general contractors, land developers. So I've kind of seen all facets of the construction, whether it be the land development side, the development side, the subcontract side, the GC side. So I kind of know all the pain points with all of that. I started my business 10 years ago because when I was in corporate America, I was traveling a ton and I'm a big family man. And so the work-life balance was just never in sync because I was traveling and I wanted to be there for my kids. So 10 years ago, I started this to just help people. And I think what I get peace of mind and happiness in my world is being able to help people from a finance standpoint that lack the time and energy as operating a business. If you're, building a carburetor, your better time is spent building another carburetor to make money than to do your own accounting and taxes, and I would say, following up on what you were just saying, Dimitri, was there's a lot of clients that I'm blown away with that they run their business, but doing accounting or anything is an aftermath. And so we'll get clients that we have to do 12 months of accounting to get to their tax return because they haven't even tracked any of that. So they're just flying blind on the business, not knowing what's going on.
I think I'm good to go, man. Really appreciate this advice, Nick.
Yeah. And I appreciate you guys taking on a dumb accountant with CPA. I know that accounting and taxes is something that's not very fun to talk about. But, when you look at it, it's one of your biggest expenses in life. It's better to be strategic than to just let it go.
Yeah. And, a lot, you can look at it as an expense, but, money is money. So let's just call it revenue. I close your eyes, CPA and accountant and CFO. I'm just going to call it revenue. It's more money that you're taking into your bank, into your pocket. Okay. It's like profit. Let's call it profit. So it's accounting and taxes is profit, business. And look, I know a lot of you guys out there, it's like your kitchen remodel, right? You say you're going to do it. You've been putting it off. It's been a decade. Your wife's mad at you. The kitchen's still not done. It's time to hire a professional. It's time to hire a CPA. It's time to look into this and get your taxes done. And by the way, all the notes, all of what we just talked about are going to be sent to your email address. All you have to do is click the link below and sign up for our newsletter. It's completely free and you're going to get the notes from this episode. So do that now. And of course, leave all the likes and comments on here. We love seeing that. We want to talk to you in the comments. It's fun. Anyway, Nick, thank you so much for coming on. It was a great episode. Look forward to seeing you soon.
Thank you guys so much. Have a good one.
Peace.
Peace.